we can handle financial markets because, of course, we've handled life and death, especially as an ICU nurse. When you've had to resuscitate people out of a distressful situation, now you get to transition into financial services, resuscitating someone out of their financial depression.
Welcome to Truly Passive Income. I'm Neil Henderson.
And I'm Clint Harris. And today's guest is Camille Scott Wiles. She's a former ICU nurse turned financial educator, retirement strategist, and author of 15 books, not 14. After nearly 14 years in nursing and a past career in Manhattan real estate, Camille now helps professionals, especially nurses, build personal wealth through life insurance-backed strategies. She's on a mission to shift people from survival mode to financial legacy. She's on a journey of helping transform healthcare workers into wealthcare leaders. Camille, love that tagline. Love everything about your background. We're excited to have you here today. How are you?
I'm good. Thank you so much for having me, guys. I can't wait to discuss with you the various topics that we're going to get into.
Yeah, we've got a lot to unpack today, so in a short amount of time to do it. So let's jump right in. If you could tell us a little bit about your background. I know you come from the healthcare industry, as do I. So tell us how you got started and then what led you to building an off-ramp from that lifestyle and going in a different direction.
Wow. Well, the journey has been quite difficult, traumatic even, but I'm just glad to have come out on the other side. I would never want to be, I'm 43 now, but I would never want to be 33 again or 23 again. And you'll know why in a minute. I grew up, born and raised in Brooklyn, New York. I'm still here. I am literally the oldest of 3 children. And I always wanted to be a nurse, but my life kind of shifted into real estate because, of course, my father was a general contractor for over 40 years. I saw him build a multi-million-dollar portfolio during the Reaganomics era. The savings and loan crisis back then in the 80s and 90s. So he was able to pick up properties for pennies on the dollar, fix it up himself, and rent them out to a lot of migrants who came during that time, like himself. So my mother, of course, was one of them. And she ended up raising 3 of us in his building that he owned. So that was my intro into real estate and seeing how he struggled, how he was able to build. I was fascinated with real estate, especially new construction. So during undergrad, as I attended Hunter College in New York City, I decided to get my real estate license. And that's when I ended up in real estate development. My first job was with Prudential Douglas Elliman before they split up. And I was an on-site property manager managing construction crews and fascinated with especially 400, 500 unit buildings, high rises, especially unique architecture. I love that. And dealing with various sponsors from all over the world, investors from Japan, Europe, things of that nature. And I really, really began to love it. But this was right when the 2008 crisis was happening. And I literally watched as real estate collapsed in real time. And I was confused. I could not understand why it was happening. I said, this is real estate for a reason. That's what they call it, real estate. How does this happen? Only to find out that it was rigged to blow. Those who knew this was happening because they set it up this way. And I said, never again. I will never be out of the loop. I will always know what is going on in these markets. Because, of course, I was in the market, but I didn't know the back end. What was the reason? I didn't know about what Alan Greenspan was doing. I didn't know about the working group, what they were doing with the markets. I didn't know about derivatives. I didn't know about any of this stuff, CDOs. So I said, I will never be uneducated again about the system. And it was all about wealth cycles. This was literally part of a wealth cycle that if you didn't understand what wealth cycles were, you were out of the loop. You would be, if you understood, you got out before the real estate collapse happened. If you didn't know, you got fleeced. And that's what happened with a lot of people. So that's when I realized, I said, who do you trust? Because the banks at that point, they were scared too until they got bailed out. And then I started to notice, okay, who made money during the crisis? Who didn't make money? And who came out literally virtually unscathed? And that's when I realized, okay, this was rigged. So I'm going to make sure I stick to the one asset that I knew that I could trust. 5,000 years of history, bar none. I'm going to go with that. And I decided, okay, I'm going to start to focus on precious metals. Now, before that, I started to learn about banks, the central bank, the Federal Reserve, what their role was. But then I said, well, wait a minute. Now I have no career. I was just about to build my real estate career to the top. but now I got to pivot. So my mother goes, "Hey, Camille, why don't we go into nursing? I've been trying to be a nurse for years, for decades even. Let's go try again." So my mother encouraged me to go get a nursing scholarship with her. And we both tried to get it. I got the scholarship and she didn't. A year later, after graduating from nursing school, I found out she had stage 4 pancreatic cancer, which had metastasized to her liver. So at that point, we knew she was going. My father, however, he was still struggling. He had 4 stents in his heart. He had prostate cancer, then kidney cancer after that. But he was a trooper. He was just going to remove his kidneys, right? No problem. A massive stroke took him out. And they were the same age. They were 62 years old. And unfortunately, they both died 19 hours apart, May 14th and May 15th of 2012. That completely changed my life, as you can imagine. So now I become a matriarch of 2 families, just as I began my nursing career. Absolutely traumatic, absolutely a moment that I'll never forget. But it was almost as if they raised me, they instilled the values in me to handle this situation in the way that I was able to. So when I tell you that precious metals became the anchor that I had to use in order to make sure that my family was financially stable, that's what I had to do. So whatever they had left, because of course, because of my father's lack of education, he lost as much as he earned in his lifetime, which was another tragedy that I saw because he wasn't properly financially prepared, which is why I do what I do now. My mother, thank God, she had life insurance. He didn't. So come to find out, like, whoa, okay. So whatever they had left, I was able to take that and put into metals. And of course, for 13 years, I worked hard as a nurse, especially through COVID, saving every single thing that I had and putting it into metals. And then, of course, getting my life insurance license, becoming a financial professional, combining the first financial professional to combine the strategy of precious metals investing with life insurance and annuities. Having that umbrella, so to speak, where not only can I use life insurance as a leverage, as setting up as a family banking strategy, but also having annuities, which will guarantee income. But precious metals being able to hedge against inflation, especially third-party risk, which is a huge deal. And of course, because life insurance is tax-free, I'd be able to divert from excessive taxation and protection from creditors, lawsuits, things of that nature. So I use this strategy literally to be able to retire myself at 41 from ICU nursing. And now um, I've been able to write 15 books at this point based on financial literacy. I am now, even though I'm retired from ICU nursing, I'm a director of nursing of my own health and wellness company because, of course, I want to be an entrepreneur. And I decided, well, I need to now, since I know healthcare, I know technology, and I know health, especially wealth technology, let me combine the two and be able to be a specialist in healthcare and wealthcare. So now I'm in this position now where I just want to educate as many people as possible to not only focus on their wealth, but once they have their wealth together, their health will be able to be in line. So that's my journey. That's my story. And oh, by the way, when I lost my parents as well, 5 years later, I lost my sister as well. So she was 38 at the time and she left behind 3 children. So not only did I have no parents, I also had 3 children, 3 nieces and nephews to raise as well. So talk about tragedy after tragedy after tragedy. And of course, she didn't have a life insurance policy either. So this is why my mission is so crucial in this day and age and in this time.
Your family is so blessed to have you. So we're familiar. I implement the infinite banking strategy. I'm not sure if that's what you're talking about, but I want to dive a little bit more into. Okay, so I implement the infinite banking strategy, which is essentially, I'm going to oversimplify this, but you take money and you overfund a cash value life insurance policy. The money that's in there is growing at a fairly low rate, usually 3 to 4%, something like that. And then you can borrow against that. You're not borrowing the money out of the policy. You're borrowing against the money in the policy, which acts as cash. So technically, it's still earning a return. Then you can take that money, go reinvest it in something else. You have the death benefit, but actually the death benefit of the life insurance is not what you're going for. It's the fact that the money, you're double dipping, right? The money is growing there. You can reinvest the money. And then when you take a payout from life insurance, it's non-taxable. So there's a lot of benefits that way as well. Now you're combining the infinite banking strategy. A lot of people use that for syndication. That's what I've used it for, or I'm in the process of using it for. and you're combining that with precious metals. I've got a couple 100 ounces of silver or something like that in a closet somewhere, and we're all sitting there waiting on that to go up. I have a feeling that's probably not what you're doing, but one of the things about commodities in precious metals is that they don't cash flow. There's another end of this spectrum that's wildly active. I sat in actually this past week on a training session just to watch somebody do it. They're trading commodity futures on precious metals, and they're sitting there watching the green and the red ticker go up and down, and they're placing bets essentially and riding it up and down. And the mantra is, you can have a bad trade, just never have a bad day. And they're day traders, essentially trading time for money. So I know the really passive strategy of like buy metal and forget about it. I know the wildly active strategy, which is good as long as everything's working, but you can lose a lot, I would imagine. And I love the idea of combining that with the infinite banking strategy. But for those of us that don't know, what is your strategy with precious metals, and how, especially at such a young age, you were able to retire yourself? It could be from residuals from the 473 books that you've written, it sounds like. But my question is, how has the precious metals side of things, how is that generating income for you? And what is your strategy that you use there?
Oh, excellent. So my main income really comes from, of course, policies, because of course I own my own financial brokerage now. I have about 85 agents working with me. So I would say my main income, of course, comes from my brokerage, helping other agents not only get their license, but also learn about annuities, learn about the infinite banking strategy so they can help business owners especially, and of course high income clients, particularly healthcare professionals like myself who really needed this guidance and this education. But how precious metals fits into that strategy. I focus mainly on the physical acquisition, but my particular strategy was very unique to where no matter what the spot price did, I was still able to quadruple my portfolio regardless of what the spot price did by buying Pacific precious metals. So Pacific silver products, Pacific gold products. My favorite gold products, I would tell you right now, is those that are divisible, those that are breakable by grams. For silver products, my favorite products are those who have limited mintage, but they're still numismatic. Those have they're minted within Pacific years, and the older they are, of course, the more they appreciate. So a lot of people don't know about that side about precious metals. So when it comes to Philharmonics, Austrian Philharmonics, or even Australian Perth Mint, or even Mexican Libertads, which are my favorite. If you notice, and if you were to look at any of the precious metals dealers, you look at the prices for those that were minted from 2012, 2014, 2016, they have appreciated rapidly. They have gone up in value hugely. Why? Because of the limited mintage of those years. So yes, I've watched my portfolio go up, even though silver hasn't really budged, to be honest with you. When I first started buying silver, it was at $31, roughly about, and it went up to about 36. It's right around 37 right now. It hasn't really done much of a difference, and yet I was still able to quadruple my portfolio. And I actually teach that in my Precious Metals Masterclass course, which not only does it include my strategy, my exit strategy as well. Once precious metals does reach a peak, especially when it comes to gold to silver ratio, the Dow gold ratio, which is what another one I look at, the gold to real estate ratio is what I also look at. I develop my exit strategy based on those ratios, but also I include a futures trading course as well, because I do look at futures so that I will know when to get in and get out of the market. I know how to hedge against my purchases. I also included an AI trading course as well if someone wants to use AI, because now that is also included. A lot of people are using AI now for their trades. So how can I implement that? How can I win more often than losing more often in my trade? So yes, I do trade as well. That's how I also generate income. But I also, of course, use my physical precious metal strategy, buying Pacific products, not just, regular generic rounds. Normally stay away from those, and also slabs, anything with MS-70 or MS-69 or whatever the case would be. You don't need those. Just stick with the numismatics, those that are minted by year. And of course, stick with the regionals, Mexican Libertads, Canadian Maple Leafs. I love Austrian Philharmonics though. And I definitely love Australian Perth Mint coins. They're really, really the best.
Okay. Camille and Clint.
Yes.
So my first question is, Are you buying the physical metal?
Yes.
Okay, and where do you keep it?
Oh,
And
excellent
you
question.
can be a little vague.
And what's your address?
And what's your address? No. I'm ignorant about precious metals. I am absolutely ignorant. I freely admit that. So you're buying the physical coins. Are you able to take possession of them, or do you have to store them somewhere?
Oh, yes. You can either take physical possession of them. Like there's certain particular metals in which I do take physical possession because, of course, you want to be able to reach out and touch, especially if there's a situation where the bank shut down, banking holiday. Oh, you can't extract your money. You want to be able to barter with something. Then, yes, you want to like junk silver is by far my favorite. Coins that have been minted before 1965 had about 90% silver in them. So those are the ones that I definitely want to have nearby. But the rest of them, I use, there's particular precious metals dealers that actually have storage facilities that they actually can accommodate for you. And they'll store it for free for you. Of course, with a monthly fee. And maybe they even give you a deal where you'll get like 3 months free, whatever the case may be. They have storage facilities in Singapore, Utah, Texas, Nevada. Nevada is one of my favorite places as well. So yeah, and of course the Cayman Islands. I love the Cayman Islands. So, and of course, Singapore, of course, if you decided or if you wanted to decide to maybe in the future want to move to Asia, like if you want to stay in Thailand, a lot of expats stay there. Yes, Singapore would be a great place to store as well. But yes, if you're accumulating a lot like myself, you want to be able to have different options to be able to store outside of your home, of course. But yeah, you do want some to be able to reach out and touch.
Yeah, it opens up this can of worms where like, in order for you to buy enough silver, it's a huge amount. You have to have a place to say it versus you buy enough gold. It's a small amount, but it's really high value. So somebody could walk away with it. So you have to be careful about there. There's a strategy that I uncovered recently that a friend of mine has that there's this discrepancy in the precious metals world where a lot of dealers are selling things based upon the junk price. And it sounds to me, Camille, like what you're doing is basically like the value of the silver is almost your basis, right? But what you're buying, like that at the end of the day, whatever silver is in that coin, like that's the rock bottom basis. The appreciation that's happening is because of the collectability of the coin or the desirability of the bullion, whatever it may be. I have a friend who goes around to coin shops and they typically all have like a bag or a box or a drawer full of junk silver, and they know what it's worth. What's the melt value? And so he'll buy a couple $1,000s worth of melt value, and then he uses a AI tool on his phone to go through and scan each individual coin. And you may get a coin that has a melt value of $30, but you might have a collector's value of $120. And if you find the right, this one has a D on it. Oh, this one was minted during the war, and you can see that this number wore off, but they couldn't fix it because all the metal was being allocated to the war. So there's different collector things. So it sounds to me the value delta that you're looking for is the baseline is the metal and what the spot price of the metal is. But the appreciation that you are getting is the collectability or the rareness of the bullion or the coin. Is that fair to say?
Yes, you got it.
So how laborious is this? If you're like, my friend is doing this and I'm like, man, this is a slow way to get rich, right? It kind of reminds me of like looking for wheat pennies. Like you're getting rolls and rolls and rolls of them from the bank, and you get, $500 worth of pennies, and you're going to go through all of them and you're going to find a few wheat pennies in there. And obviously that's an oversimplification, but the reality is like, that's what you're doing. Like, how do you do this at scale? How do you do this at scale on a larger level?
That's why for me, because I'm like, I don't have time to be going through wheat pennies or even through junk silver to see which collectible coin there is, which is very, very rare. So I just tend to buy in bulk, if possible, because of course, if you buy in bulk, you save more. I would buy in bulk, whether it's Mexican Libertads or Australian Perth Mint coins, particularly, especially if it's half ounce or even a quarter of an ounce. Because of course, the smaller the denomination is, the more barterability. You become the change instead of having to look for change. Also, just look at the particular product in order to buy in bulk so that I don't have to worry about siphoning through particular collectible coins, because I know the older the coin is, the more rare it's going to be. Like, for instance, the 2018 Mexican Libertads. I didn't know at the time how limited they were going to be minted, but only 300,000 was minted. That same year, 42 million American Eagles was minted that year. You see the difference? So those coins ended up being a huge collectible value, even though they're just regular numismatic coins compared to American Silver Eagles. So that's what I'm talking about. If you really pay attention to the limited mintage, and on top of that, knowing that Mexico has only one of the only silver mines in the world, and they only have about 4 to 5 years left of silver left, which is huge. So knowing these dynamics too, because of course, silver has 10,000 uses. There's only about a few silver mines in the world. Right now, China is buying all these raw, rare minerals. And, it's just a collection of who can get more rare minerals than the United States. It's this back and forth. And they're doing this, they're usurping around the market so that it doesn't raise the prices too high. They're going directly to the miners now to buy their metals. It's really precarious what's going on. But I just tend to pick specific coins that I know will have collectible value and I know are being minted very, very, very small mintage, such as Australian Perth Mint coins. Their Lunar series, particularly, that's based on a Chinese lunar calendar. They only mint 300,000 of the 1 ounce. But the half ounce coins are even rarer. A lot of people don't know that. So I tend to stick to the half ounce coins because they go up, they shoot up in value. I'm looking at some of my coins right now. They've gone up 6 times the original price that I bought them for. Insane. Like when I see things like that, it's like, wow. And I can go to any coin shop and get it for the price that once they look on eBay and once they look on all these other sites, they'll be able to see, yeah, wow, this coin is really valuable. I'm going to get my money back times, the price that has gone up. It's really, really incredible how certain products have value compared to others, even more so than the metal. Go ahead.
Let me ask you a question. I find this fascinating because we're talking about 2 different valuations, right? You talk about the spot value and then the intrinsic collector value. What happens traditionally when, let's say, a 2008 market crash or any of them, like Great Depression or anything else like that? A lot of times as the value of the dollar goes down, the value of those metals stabilizes or goes up. Everybody's worried about the dollar crashing. Like, what happens to the collector's value of these coins in a down market?
That's an excellent question. Normally in a down market, especially when there's a crash, yeah, you're only going to get melt value for these collectible coins. But in the future, especially now as silver becomes even more rare, I believe that these collectible coins are going to definitely be worth even more so now. In the past, yes, that was. If there was a market crash, you're only going to get melt value, period. Like nobody's going to pay you for the collectible value. Especially back then too, there was more silver available. Now it's coming out of the ground at 1-7. That's the gold to silver ratio. It's being traded in the markets at 100-1 right now. It is absolutely ridiculous. So when you look at those ratios and how things have changed dynamically in the markets, you can see that now collectible value is actually going to be worth something in the future now. It's not just going to be, you're only going to get it for melt value. If we do have a market crash, collectible coins will be very, very valuable and even more so than even the metal itself, I believe.
All right. So I want to wrap up we could go on for the entire show and talk about coins and precious metals, but I want to tie this up a little bit. So for someone who has no experience, like don't buy, they've just got a stock portfolio, where do you get started in buying precious metals and collectible coins?
Okay, indeed. So the first thing I would do, especially if someone has a stock portfolio, is to ask them, I would ask them straight up, what are your tax liabilities? Are you able to save from a significant amount in taxes? Of course, I would diversify them, of course, with the infinite banking strategy, annuities if possible. But also when it comes to precious metals, I use the infinite banking strategy, of course, to acquire precious metals so that I can avoid the government even knowing that I own precious metals. So, of course, I don't believe in gold IRAs. I think could be quite dangerous in this environment. So that's why I use that. But if someone who has no clue about precious metals, I would look at the reputable dealers, especially those in the United States. AtMex is the number one that I would look at, of course. But then I would also look at JM Bullion, SD Bullion. These precious metals dealers have been around for I've been buying from them for 14 years. So they are definitely reputable. There's been a few dealers that have gone bankrupt and gone by the wayside, but these have stood the test of time. Thank God. So for someone who is just buying metals, it's not so much where to buy it, but what to buy. Because if you buy the wrong thing, and if you're buying just regular generic or silver bars or silver rounds, you're going to get a heart attack when you see the price drop. Because, of course, these markets are heavily manipulated still. So you want to buy the right products, and you want to be able to buy and hold, not so much to buy to sell, because you make money when you buy something. You don't make money when you sell, of course. So that would be my advice to someone who has a huge stock portfolio and wants to diversify into metals. Know the dealers, know what to buy, and of course, you want to buy without having to pay taxes on your capital gains. Honestly, so you have to structure it properly, in which you don't have to worry about that particular instance. Which is why I incorporate life insurance and annuities into the strategy.
Life insurance,
yes,
sure, awesome. I love the layered strategy. I want to go back to your healthcare background. So one of the things that you mentioned is that nurses have a superpower when transitioning into the financial world. What do you mean by that? And walk us through that.
Oh, wow. Well, first of all, we're nurturers. Nursing professionals in general is known as the most honorable profession. If you Google it right now, which profession is the most honorable, that will come up, nurses. So we are taught leadership from a very early on. And that's because we work under pressure. When I tell you pressure, pressure can bust pipes or pressure can make diamonds. Either way, a lot of us do crash out and end up leaving the field. A lot of us stay strong. And of course, because we are educators, we are teaching patients how to maintain their lifestyle even after being discharged. We are essential leaders under pressure. We can handle financial markets because, of course, we've handled life and death, especially as an ICU nurse. When you've had to resuscitate people out of a distressful situation, now you get to transition into financial services, resuscitating someone out of their financial depression. It's a huge relief. Not only that, we are nurturers. We can literally holistically look at someone and see what their needs are from every single level. Because a lot, and of course, as a nurse, what I've noticed is that the main basis of mental health is financial. When people don't have enough finances, they tend to break down into ways in which they literally, they might lose their mind if they cannot feed their family, if they cannot sustain, if they don't know what their future is going to be. So as a nurse, I can come in and evaluate and go, hey, this is what we need to do in order to maintain your mental clarity, so that now you can then focus on other things, other areas of your life. So I think nurses definitely have a superpower in that perspective. And I'm able to use that with abandon with my clients because, of course, they can relate. They know, they trust the RN behind my name, but they also know my experience. And now I can implement that into financial services. And of course, they become family after that because, of course, I become their financial advisor for life. So, which is another beautiful thing. Because, of course, once you remember the nurse who saved your life, and you remember the person who saved you financially, you never forget them. So, and I was a hospice nurse too. So that was another thing. It was always an honor to take care of someone, especially if they were passing away, because you were the last person they would remember before they saw God. I always thought of that as a true honor. So yes, I transitioned that into financial services, and it's truly an honor. And people are very, very grateful. Very.
It's an interesting position to be for someone who's now a financial advisor, having an acute awareness of death.
Yes.
Like none of us gets out of this alive. And what you're trying to do is set people up to enjoy their life.
Yes.
As long as they have it. Quality of life. And so I've heard one of your really compelling arguments is that about retiring by design, not by default. What does that look like in practice, and how early should someone start thinking that way?
Oh, wow. Yeah, that's an excellent question. So, a lot of people are just on that hamster wheel, just working, working. They're not, they're either too trusting of their employers, thinking that one day they won't get that pink slip. They just continue to oh, I just got to pay bills. I got to feed my family. They're not thinking about the instability of the markets. They're not thinking about the instability of the company that they're working for. They're not thinking of the instability of the system in of itself. They're not even thinking maybe I should have some part of my wealth outside of the system so that if the system fails me, I'm okay. The world might be messed up, but your world does not have to be. You can literally put that barrier between you and the system and be okay and be autonomous. A lot of people are not autonomous when it comes to this system. So by default, a lot of people are just on this hamster wheel and thinking, okay, Social Security, my 401k, my IRA is going to protect me. No, that's not the case. Right now, private equity firms are trying to push off their junk investments onto people who have 401ks and IRAs because they already did that with pension plans. So when I tell you the corruption is real and now they're doing the same thing that happened in 2008, they're doing it again because $84 trillion of retirement funds are being transferred right now. And all these schemes, all these scams, all they're doing is trying to siphon off that money to themselves. So when I say it's by default, people are just, the money's there. I don't have to worry about it. Yes, you do. Because government spending, of course, the credit issue right now, we have $9 trillion that we have to roll over of our national debt at higher interest rates. What if a bank fails the next time? They might do a bail-in rather than a bailout. That's what I mean by default. Now, by design, it's completely different. You see the cracks in the system. You do not trust the elites or the oligarchs or the people who are in charge. So what do? You start putting your money, your assets outside of the system. You start with, of course, life insurance, of course. You start with a private fixed index annuities, which, of course, is outside of the system. It mirrors the S&P 500, but it's not at risk in these markets. You can guarantee, matter of fact, there's a few products here which we can guarantee income through annuities and then using life insurance and annuities to buy precious metals. And you have it outside the system. It's under your control. It's under your lock and key. You have it in storage. Nobody has to know. You put it under a trust, of course, because I can actually set up a free trust and will for people. So you put it under a trust so that your children, your grandchildren, they know where it is. They know how to access it. And no matter what happens with the system, you are properly secured because it's outside of the system. So that's what people need to start preparing, to put their assets outside of the system by design rather than waiting for something to happen by default. Because a lot of people are just being reactive instead of proactive. And we can't do that anymore.
Camille, I got a question for you. This is a question that we ask all of our guests. Could be a book that you like, could be a book that you don't like. But honestly, the question is there, when you find yourself in conversation, when you find yourself coaching people or talking to nurses that you work with, is there one book that you find yourself quoting or bringing up more often than others that you recommend that people reach out and read?
Well, there was a few that definitely inspired me to write one of my 15 books. Definitely The Gold and Silver by Mike Maloney. He's one of my biggest mentors when it comes to gold and silver, especially when it comes to wealth cycles. Everyone needs to understand what wealth cycles are and how important they are and how very, very critical they are when it comes to building generational wealth. So I literally wrote my own book called The Golden Exit, which is a nurse's guide to holding precious metals and also how to exit, especially when it comes to precious metals. Okay, when do I get out of precious metals and get back into stocks, bonds, real estate? But also when to exit currently, how to exit stocks, bonds, and real estate and get back into precious metals and why that is. And I have statistics and articles and all kinds of data to back that up. So yes, I recommend The Golden Exit, which you can get at my bookstore on payhip.com/Precious Metals Masterclass.
Okay. Great.
I love that. Well, let's dive into the best way that people can connect with you. So Camille Scott Wiles, first of all, let me just say, this has been great. This is a subject matter that we have not gone over with before, and we're 120 or so episodes in. So thank you for being unique and standing out in that regard. We really appreciate it. Thank you for your willingness to share. If any of our listeners want to hear more about you, find any of your books, learn more about your coaching or anything else, what would be the best way for them to connect with you and do that?
Excellent. Go to preciousmetalsmasterclass.com. I have all my books there, as well as you get to be introduced to my team of financial professionals that can certainly help and guide you during this treacherous time and answer any questions you may have. I have a team of members of all over the world, from South Korea to Africa. Not only am I a national agent, I'm an international agent as well. I'm licensed in Mexico and Canada. So I can help pretty much anyone around the world. And I just want to continue to educate people. So I also have a free webinar on the site too as well that will further educate you. So preciousmetalsmasterclass.com is definitely where you can get me. And you can schedule a one-to-one appointment on my calendar there.
Excellent. Well, thank you, Camille. Thank you so much. We really appreciate it. Thanks for contributing to our listeners.
It's been great. Thank you.
Thank you.
Thank you so much for listening and watching the Truly Passive Income podcast. If you liked the show, if you think it would be useful for someone else, the greatest compliment that you could give us would be to share the episode, leave a comment down below, or leave us an honest review. If you have any questions, don't hesitate to let us know down below. And remember, with truly passive income comes freedom of time, place, and the freedom to pursue your higher purpose.